All right, guys, today we're going to do 13.1, recording a payroll. I would recommend looking at pages 369 and 371 in the book to get you kind of familiar with what a payroll register looks like, and then the cash payment journal entry for paying the salary expense. But with that said, let's go ahead and take a look here at Work Together 13.1. If I pull up the instructions, it gives me this here. It says Metro Company's payroll, gives me the following information. So I've got total earnings, federal income tax withheld, Social Security tax withheld, and Medicare tax withheld. So what these withhelds mean is that they are liabilities. We're not going to pay them yet. Most businesses will pay their tax liabilities quarterly. So for this, we don't have to actually make the payment of those. We just have to withhold them from their checks. So the way that that works is if we're going to post this in here on July, and I'll go back and do the T accounts in just a second, but on the 15th, this is where we are going to make our payment of the salary expense. But all of our next ones here are going to be payables that you'll notice. Okay. So I've just got those accounts from here. So this is employee income tax, Social Security tax, and Medicare. Okay. They're payables, again, letting me know that they're liabilities that I don't have to pay yet, but I need to credit their balance. And then we'll debit those when we actually make the payment of these. Right now, we're not making a payment on these. We're just making a payment to the actual employees themselves. That's why we'll have a cash credit here for the difference between the salary expense and minus their taxes that they're withheld. Okay, so we start here with our debit amount of their total earnings. Okay, so that's like if you get a paycheck, the thing that says gross wages before any deductions are taken out. Then we're going to put in our federal income tax here. Just transferring the numbers directly from here. 781.20 and 182.70 here. All right, so now at this point, though, our debits don't equal our credits. So what I've got to do is subtract all of the deductions from their total earnings. And so I end up with this, $10,450.10. Okay, so again, what this looks like is when you get your paycheck, the thing here that says gross wages, and then you've got all of these that are taken out of your paychecks till you ultimately get this, what you actually can take home and spend. Now, their numbers are going to be a little bit higher because we're doing this for a whole bunch of employees. Again, if you look back on page 369, it's got all of our employees on this payroll register. So that's where we get these numbers from. So salary expenses, the gross wages for everybody that works for the company. All of these income tax, Social Security tax, and Medicare tax withhelds are the things that are taken out of everybody's paycheck. And then this is everyone's take-home pay. Okay, so the business has to keep track of all of that, not just you as an individual employee. Okay. Also, if page 371 in the book, there's a couple of additional ones beneath these that are health insurance premiums, U.S. savings bonds, etc. Some businesses pay for your health care. Some will help you with bonds and investments and stuff like that. Some don't. This business obviously does not. So, okay, back to our T accounts. We're just going to put them in based on where they go here. So 1168 $781.20, I think it was. 182.70 and $10,450.10. Okay, so again, make sure that you do your cash credit last on this. Put in your salary expense, which is your total earnings. Put in your individual tax payables. Subtract your tax payables from your salary expense to get the amount that is cash credit.